Hello, Conrad. Great to see you on reporting day. How are you?
Yeah, I'm good. Thank you for having me, Kai.
Yeah, so the last time we spoke was after our 9-month results. At that time, there was a bit of a mixed picture and you were a bit ambiguous. So how has that continued into the fourth quarter of last year?
Yeah, if you look at the fourth quarter for last year, Kai, we're very pleased that all of our businesses returned back to growth. So if you look at the overall numbers, we delivered revenue of 1.1 billion Swiss francs. That represented a 5% increase in local currency. Catalyst even stronger, 7% up in revenue. And if you look at Care Chemicals and Additives and Adsorbents, these businesses were both up by 4% in local currency.
That's great to hear, Conrad. So, of course, I want to understand a little bit better what's behind it. Let's look at the drivers for sales, for example, pricing. What can you tell us about that?
Yeah, if you look at the drivers for the sales growth, we saw overall roughly 1% volume growth. We did see 2% coming from pricing, which is a very good achievement, especially if you consider that our raw materials were still down low single digit overall. So very good and strong margin management by the businesses here. And finally, if you look at the drivers for growth, 2% came from scope. That is basically the acquisition of Lucas Meyer.
Which tells us that in hindsight, you feel comfortable about this acquisition, which is now fully integrated into our business.
Yeah, we feel very pleased about the integration of Lucas Meyer. It is a strong contributor both to growth and profitability.
You already touched on the businesses. Now people are discussing, of course, regional differences a lot these days. So what can you tell us about our three big regions and how sales developed there?
Yeah, if you look by region, what we saw was very strong growth in the fourth quarter in Asia. We were up 11% in local currency in Asia. And the key contributor here was China with an amazing 46% year-on-year growth. This was very much triggered by all the refill business that we saw for PDH plants. So this was a strong contributor to growth in Asia. We saw in the Americas roughly 5% growth in local currency. Here, Lucas Meyer was a strong contributor. 4% out of the 5% came out of Lucas Meyer contributions. And finally, in EMEA, the picture is that overall business was flat with positive pricing offset by negative volumes.
So overall, a strong sales momentum in the fourth quarter. Did this also translate into EBITDA margins accordingly?
Yeah, overall, a strong sales momentum, and it did translate into strong profitability. If you look overall, 16.4% EBITDA margin, that was up 640 basis points from prior year. But in all fairness, that was largely because we reversed some accruals for the closing cost of our biofuels activity. We have been able to close that activity at a lower cost than anticipated. So that was a positive contribution. If you correct for that underlying, we see profitability of around 14.7% in line with prior year, 14.9%. What I think is really a result we can all be proud of is that we finished the year overall with an EBITDA margin of 16% if you don't include any one-offs and incidentals. And that's up almost 200 basis points from the prior year.
So that means despite slightly lower sales, we see stable to higher margins. So besides the sales and pricing developments you mentioned, how about cost savings? I mean, this was a self-help measure, as we call it. How does the progress we're making here?
Yeah, we were working on a program in total 175 million Swiss franc cost out. That was our target. We finished the year with 168 million Swiss franc cost out. So we almost achieved that entire program. And as you noticed, that is a strong contributor also to our profitability improvement.
Let's not forget that we also are reporting our non-financial KPIs and also steering the company along this KPI. What would you say? Have we made any significant progress looking at these metrics?
Yeah, our non-financial KPIs are very important. We made a lot of progress against these targets. If you start with our carbon reduction targets, our Scope 1, Scope 2 emissions reduced by 9% versus the prior year. Our Scope 3 upstream emissions reduced by 5% versus the prior year. And we also, you may remember in November in London, we announced actually that we increase our targets for carbon reduction. So we increased our Scope 1 carbon target reduction from 40 to 46% by 2030. And we doubled actually our ambition for reductions in Scope 3 upstream from 14 to 28%. So yes, we not stepping away from sustainability as a key priority for the company. We're actually increasing the targets rather than stepping away from them.
That's good to hear, this commitment, Conrad. Another aspect that I think is very relevant to all of us at Clariant is safety. So you talked about this also last time. So what's your view on the safety development?
Yeah, we were very pleased with our performance in the area of safety last year. We reduced the total number of injuries by 19%. And we are very clearly in the top quartile in terms of safety performance in our industry. So in Clariant, we are now amongst the safest chemical companies in the world. And that was a core priority for all of us.
What's the secret sauce behind it, if I may ask?
Yeah, I think the secret sauce is in the hands of all of our employees. We literally, for the first time, had 2 months without any injury in the company. That means nothing happened in our factories, nothing happened in our laboratories, nothing happened in our offices. So this is truly a collective effort by all of our employees and a very big win for the company.
Yeah, thanks, Conrad, for sharing this. And another aspect I think that is also people-driven is customer satisfaction. You're also measuring this, the so-called NPS. What has happened here, Conrad?
Yeah, with our customer NPS, we're sitting now at 45 in terms of our score, which is more than 7 points above what the average is in the chemical industry. So we're also with this performance, we are very pleased. And what is very nice is the recognition by our customers of our innovation capability. I also like to mention here the award that we won. In the last quarter, we got the Home Care Innovation Award from Unilever for a soil release polymer in one of their new laundry formulations. This is a product, it's called Persil Wonder, and it literally washes your clothes in 15 minutes, so a very short wash cycle, at very low temperatures. And then the product is also completely biodegradable. So we're extremely excited that we have been able to develop this product together with Unilever.
Yeah, it's great to hear that this is a very good example of a consumer brand that actually contains Clariant and with a clearly added value for all of us. So let's go and look for this product next time we go to the grocery store or supermarket. Yeah, Conrad, you mentioned already very strong momentum towards year end. Overall, you're also satisfied with the progress we have made. Now, looking into 2025, yeah, let's maybe start with the big picture. What is our guidance for this year now?
Yeah, our guidance for this year is top line growth between 3 and 5% in local currency. In all fairness, that will be more towards 3% if I look at current trading conditions. But clearly, what we see is growth, and that is what we're projecting. In terms of profitability, we're guiding for a range between 17 and 18% without any incidentals. That is also a clear improvement from the 16% that we achieved last year. So growth and further increases in profitability, that is our guidance for the year.
So you said, Conrad, that obviously this positive momentum seems to continue looking at the first month of this year. So in which, let's say, end markets, consumer markets, do you see demand already coming back?
Yeah, if you look high level at the trading environment, GDP last year at 2.8% globally. This year, most projections are very similar figures. Let's say 2.7% GDP. What is important is the shift back to industrial GDP. We saw that already beginning last year. So if you look at our Q4 numbers, what we see is actually consumer electronics clearly back to strong growth. If you look at furniture production, you see that in positive territory again. If we look at our exposure to automotive, which was challenged a little bit, it was -2% last year overall build rates, but electric vehicles up almost 25% last year. And that is expected to continue this year with roughly 20% growth. So if you look at the shift back in consumer spending to durable goods, that is happening, and we expect in the year to come with the impacts from the lower interest rates, especially in Europe, we expect that trend to continue. And that is actually where our products go. That is actually good for the chemical industry.
Okay, Conrad, that all sounds very positive. We still have to talk about the downside risk. And I think it's the elephant in the room, the looming tariffs that the new US administration will most likely impose. So can you tell us a little bit how Clariant is prepared for that and how you assess actually the impact of these tariffs specifically on Clariant?
Yeah, Kai, tariffs are not good for business. Tariffs are not good for economic growth, and tariffs are not good for inflation. So overall, the impact is negative. If we look more specifically at the impact for Clariant, we have set up a task force tariffs to analyze the whole situation for the company. And if you look at the situation for Clariant, we are very well positioned in the event, in the situation that tariffs will increase. We have globally 68 manufacturing sites, which means that in most of the regions, we basically produce in a region for a region. More specifically for the United States, if you look at our business in Care Chemicals, more than 90% of our local revenue is locally produced. If you look at additives and adsorbents, it's more than 70% that is locally produced in the United States for the United States. And in catalysts, the number is a little bit lower, but here we actually do not have, in the segments where we are operating in the United States, we do not have local competition. So also in catalysts, we are well positioned, first of all, with our Louisville plant, but also for some of the other products because they are not locally produced right now. So all in all, the impact for Clariant is going to be very modest. But back to my first point, if you look at the global economy, if you look at consumers, if you look at our customers, on a net basis, this will not be a positive development.
Yeah, now we talked a lot about the external world. Maybe to conclude this dialogue here, let's look at the internal situation at Clariant. What would be the most important thing, Conrad, that you would want to share with our colleagues worldwide?
Yeah, well, I'm very pleased with the performance in terms of top line growth. So we should continue to focus on growth. And even in markets that are declining, through our innovation, we can still achieve growth above the market. And that is a core priority. If you look at it, unfortunately, we have some regions, we have some markets where markets are declining. That means we do need to adjust to that new reality. And that is why we've also announced, unfortunately, but very much necessary, a new cost improvement program with an annual 80 million Swiss franc cost savings target. That is also important that we deliver that. And finally, our non-financial targets. If you look at our performance in sustainability, that continues to be a high priority for the company. If you look at our performance in terms of customer satisfaction, that continues to be a high priority for the company. If you look at the enormous improvements we made in our safety performance, a very critical priority. And last but not least, I was very pleased with the new record level of employee engagement that came out of our last employee satisfaction survey. This is the driver for all of this, and it is a big win for the company. And I want to thank everybody for their strong commitment and strong engagement to make all these results happen.
Conrad, I think this was a good final word. So thanks a lot. All the best, and we'll talk again soon. Bye-bye.
Thank you, Kai.